We're giving it 1 more minute. Hopefully we can hit the 100 mark. I'm watching the attendees closely. Hello and good and welcome to everyone on this intercontinental webinar. Depends on where you're logging in. It could be good morning, good afternoon, good evening. My name is Patrick Conte. I'm the CEO for the African Fintech Network. I would like to, on behalf of the network and our partner on this webinar, Fintech Nigeria, welcome all of us to this intercontinental webinar on a very topical subject matter, looking at scaling cross-border payments and remittances. Very topical, especially when it comes to Africa. So for this webinar, it's going to be a dialogue of what is happening largely in the global South, Africa, China, and Singapore. So we have speakers across this continent to look at the topic and really bring life to it in terms of what is happening, how far, what's happening in the space in Africa, and how is Africa dealing with the rest of the world when it comes to payment and remittances. So we have experts who actually dissect the subject, and for purpose of moderating this session, we'll be in the capable hands of one of our key partners from the African Nenda, Jacqueline Jumah, Director of Partnerships, and she will ably moderate this session. We are working on this webinar, we are working closely with Fintech Nigeria, our foremost member of the African Fintech Network. Fintech Nigeria, I'll leave it to the CEO when he providing the closing remarks to talk more about Fintech Nigeria. But suffice it to say, from a point of view of African Fintech Network, the Fintech Nigeria is our foremost member, and it's our poster child when it comes to the sort of strength, the visibility, and the voice that fintech associations bring to the development of digital finance in Africa. So we are partnering on this session to bring this webinar as part of our thought leadership, part of our way of building the ecosystem in Africa. For those who don't know the African Fintech Network, we are an ecosystem enabler in Africa. Our mandate is to champion advocacy for the development of what we describe as a Pan-African fintech ecosystem, facilitated via cooperation and collaboration of the key stakeholders, especially fintech associations, regulators, policymakers, and institutions that are working in the digital finance stroke fintech space. So this is part of our capacity building. This is part of our ecosystem work. We'd like to welcome you all. I think we're hitting almost close to the 100 mark. I would like to end my brief welcome remarks by just reading. I want to read verbatim a paragraph from, this is a report by WorldPay. It's called the Global Payments Report from 2024. WorldPay is a major player in the payment sector. And the title of the report for 2024 says, The Era of People and Payments. I'm reading verbatim. It says, the global payment landscape has throughout history been shaped most decisively by the technologies of the day. Cash in all its forms ruled for millennia, and through the industrial age, analog electronics arrived in the 20th century to support the reign of cards. The emergence of the internet and e-commerce ushered in the arrival of alternative payment methods in the late 1990s. Today, digital innovations generate an ever-expanding array of payment types. Consumers have more payment options than ever. It says, we are entering an era defined not by technology, but by people. We are entering an era where choice is the main driver of the payment landscape. Consumers and their collective choices are the main center of payment gravity, a living force that is pushing merchants to optimize payment choices. Today's choice era is one of limitless possibilities to consumers, merchants, and the payment industry. I'll leave it there and again say welcome to all of you, speakers, moderator, panelists. Thank you very much. I'll pass on the virtual mic so the CEO for Fintech Nigeria, to anchor the polls for us. Thank you, Mr. Bremer.
Thank you, Doc. It's a pleasure to have all of you join us today. So we'll start straight with a poll. What really interests you when it comes to cross-border payment? The poll will go up now. We'll do that, and then the panel will start the discussion. So can we have the poll, please? We want everybody to vote. Let's have your voice on the poll. So we have a minute more on the poll. Okay, can we close the poll and let's see what the result is like? Okay. So inefficiencies, wow, 100% of the people think that that's the biggest issue. Potential of impact on innovative technologies. Oh, you have the answer there is okay. That's multiple stroke changing regulations. You have more people saying 5 is important to them. Same with interoperability. I think the only place where we have a difference is the potential impact of innovative technologies, where you have 2 or 3, yeah, so being the highest. But what's really important is that we all think that all these issues are important for cross-border payment, and I think which is critical. So I guess that the panelists will also take this into consideration when addressing the issue. So thank you very much for taking part in the poll. Let me hand over to Jacqueline as she takes us through today's discussion. Over to you, Jacqueline.
Thank you. It's interesting to see the prevailing themes, which are pretty much aligned with what we have lined up in this plenary session, where our conversation will be touching on these themes, and we expect to contribute to the question in the room: how might we support the scale of cross-border digital payments and remittances? Again, welcome everyone in today's exciting webinar on scaling cross-border digital payments. My name is Jacqueline Jumah. I'm the Director for Advocacy and Capacity Development at the African Nenda Foundation. The African Nenda Foundation, our mandate is to support the scale of inclusive instant payment systems in Africa. Before we jump into our discussion, let me introduce you to our distinguished panel and speakers from diverse global contexts, each bringing a wealth of knowledge and experience to the table. I'll start by inviting each of them to briefly introduce themselves and just share with us their backgrounds or the regions that they're representing. Welcome to our panelists. I think we can start with Abiodun.
Thank you very much, Jacqueline, for having me here. Hi, everyone. Good afternoon, good evening, wherever you're joining from. My name is Abi. Abiodun Animashaun precisely. Currently, I'm the country director for Chee here in Nigeria, and I also double as head of product. Essentially, our aim or our vision at Chee today is to be a platform that's going to power cross-border remittance across cities in Africa. So think about sending money or value from Nigeria to Ghana to South Africa, and as far as Uganda, our aim at Chee today is basically to power that sort of infrastructure for cross-border remittance across Africa. In a 6-year-old company, we've amassed over 7 million users, across all the countries where we operate from, and essentially our vision is to enable the movement of money freely across the African continent. Thank you for having me.
Thank you. We look forward to hearing perspectives from Africa shared by Abiodun. Next, I'll invite Paul. Please introduce yourself.
Very happy to join this very cross-border, cross-continental forum. My name is Paul. I'm the president of Hong Kong Fintech Industry. Anniversary. At all talking about that. So very excited about you
I'm struggling to hear you, Paul. I don't know, it's just me.
Yes, the same here. The connection
Okay.
was not coming through.
And I think yeah. Hello, Paul, can you hear me?
Yeah, I can. Sorry, my line dropped. Is that okay now?
Yeah, we can hear you clearly now. If you don't mind, just come again because we were having difficulties hearing you.
Oh, okay. Sorry. Yeah, this is Paul. Very happy to join this forum. Very cross-intercontinental. I am the president of Hong Kong Fintech Industry Association. We are one of the oldest fintech association in the region because this is the 10th anniversary for us this year. I still remember 10 years ago, the term fintech was not popular at all. That was a very new thing at that time. But when we look at now, fintech is everywhere in every industry, and it becomes the infrastructure for all the commerce building on top of that, especially on payment side. No cross-border trade can work without a good cross-border payment. So I'm really excited to communicate, exchange more with all of you, find some new innovative solution. Thank you.
Thank you very much. We also look forward to contributions and knowledge from the Asia side. Lastly, but not least, I'd like to introduce Chee. Join us.
Hi, my name is Chee. I'm from Singapore. Currently a lead consultant with a company called JForth. We specialize it's a boutique consultancy specializing in different areas of expertise, including compliance, ESG, and my specialization would be on the fintech and payments, essentially both domestic and cross-border. I spent the last 15 years on payments, having hands-on experience launching back in 2014 Singtel Dash, Singtel is the largest telecommunication company in Southeast Asia. And back then we launched a mobile wallet called Singtel Dash in partnership with Standard Chartered Bank, availing P2P service payment to merchant and also mobile remittance back in 2014. And more recently, I was with a company called Niam, Instagram Niam, which is a global fintech doing cross-border payments for across the whole spectrum of individuals, SME, and large enterprises. So happy to share my perspective on this area, being a non-bank, and also not just from the perspective of Singapore, but I'm able to share about ASEAN.
Thank you very much. I'd like to now turn to the audience to just encourage you to introduce yourselves via the chat function and tell us where you're joining from. We value your participation, and in the spirit of just making this an interactive discussion, we encourage that you share with us comments, questions as we go along. We will be addressing these questions and comments in the Q&A segment following the plenary session. As we begin our exploration in this topic, let's set some context by just looking at what the data is saying and some compelling insights from around the world. In the recent years, digital payments have seen remarkable growth, both globally and in Africa. There's some data from Statista here, where we look at the global digital payments being projected to reach $12.27 trillion by 2027, reflecting serious or significant growth, especially between 2023 and 2027. In Africa, we also look at the rise of mobile money that has been transformational in the continent, accounting for 70% of the world's $1 trillion mobile money transactions market. And this is according to the GSMA 2023 State of the Industry Report. We also have additional, data, and here we look at the State of Inclusive Instant Payment Systems, which we call SIPS in Africa report by Nenda, that highlights that in 2023, there are 29 domestic instant payment systems across 21 countries and 3 regional instant payment systems, altogether processing 31 billion transactions, reaching the value of about $1 trillion USD. Interestingly, this same report has a spotlight section that talks about the cross-border digital payments challenges in Africa and highlights that despite all this growth, retail cross-border payments are expensive, inaccessible to many users, and largely informal. These figures underscore Africa's pivotal role in shaping the future of digital payments, and the momentum is clear. And it calls for the continent's adaptability, ensuring that there's a potential to influence global payment trends by solving unique challenges and also harnessing the existing opportunities and fostering innovation. In the realm of remittances, according to the World Bank report, global remittances are growing, and they have reached $794 billion in 2022, with Sub-Saharan Africa accounting for $55 billion of this total, again underscoring the region's growing importance in the remittance space. However, we still have challenges around the cost, and where we see that the cost of sending remittances remains high at 8%, compared to the global average of 6%. So collectively, these data points highlight the weight of our conversations today, and these are the themes that we will be looking at together with the speakers of the day. Firstly, we'll explore the importance of collaboration and interoperability, where seamless integration across borders and systems is crucial for efficiency and scalability, especially in the wake of boosting regional trade in Africa under the AFCFTA. Secondly, we'll look at reducing costs, ensuring enhancing customer experience for both individuals and businesses, and also just avenues for enhancing competition and the digital acceptance. The third theme that we'll be looking at today is on leveraging technology advancements and enhancing security. And lastly, we'll look at the impact and future trends. And I'm happy that from the earlier poll, we could see a lot of weight going to the potential of the impact of digital in the socio-economic development of Africans. My first question will first of all go to all the distinguished speakers, and it's just an appreciation of what's going on. I know you've touched on the different areas that the different institutions are focusing on, but just to set the pace for today's conversation, I think it's important that you share what key developments you're seeing from your perspectives, to give us a starting point in terms of the conversation today. So I think we will start with Mr. Chee, then we go to Abiodun, then Paul. Share with us what you're seeing as key developments in in your specific areas.
Sure. I'm happy to talk about ASEAN, Southeast Asia. So if you look at ASEAN, ASEAN comprises of 10 countries, and with a total population size of 673 million. Well, I would say not as large as Africa, but still is a significant transaction going on in terms of cross-border payments among the population within ASEAN. And if you look at from the World Economic Forum, they reported that the gross digital payments across the 6 largest ASEAN economies reached 806 billion in 2022. And that's a 14% year-on-year increase, and is projected to surpass 1.2 trillion by 2025 next year. Another notable point would be the fact that a lot of the ASEAN countries have very high adoption of mobile e-wallet, like in countries such as Thailand, Vietnam, Philippines, Malaysia, Indonesia are amongst the global top adopters of e-wallets, which also has the implication because gone are the days where, when it comes to cross-border payments, sending to bank accounts would be sufficient. Therefore, the importance to ensure that the coverage beyond paying out to bank accounts include e-wallets as an alternative payment method would be very important if we are servicing the Southeast Asian countries. And if you look at also in terms of the remittance volume, based on the World Bank report on the Migration and Development Brief on the June 2024, 4 out of the 5 top recipients in the East Asian and Pacific in 2023 were from Asia. That includes the number 1 in Philippines, which essentially is the largest inward remittance, followed by Indonesia, Vietnam, and Thailand. And I would like to highlight one notable innovation that is in this region, which everybody would have heard about. That's the initiative championed by the BIS on Project Nexus, which is really the trend of how do you interconnect all the real-time payment system, which in their lingo is called the Instant Payment System, IPS. And the participating countries in Indonesia, Malaysia, Philippines, Singapore, and Thailand. Each of these countries have their own respective instant payment system. And through this initiative is how we can leverage on the interconnectivity of this IPS to facilitate cross-border. And this is part of the G20 and the UN SDG target of reducing the cross-border costs to 3% of the value of payments. And that is something I think would be extremely exciting development. Currently, is at the blueprint stage. So I'm eagerly looking forward to its implementation, and that will be an interesting model for many other countries to examine.
Thank you very much. Indeed, it's exciting to hear the adoption of e-wallets in Southeastern Asian countries, as well as the commitments around reducing the costs in enforcing or endorsing the G20 commitments by different stakeholders. We're also looking forward to hear more on Project Nexus and the drive on interoperability. Next, I think we can go with Abiodun.
Thank you very much, Jacqueline. So I would start by highlighting that in 2021 alone, the remittance volume into Africa was estimated about $49 billion, being classed as remittance sent into Africa. And I mean, from different parts of the world, I mean, settling into markets like Nigeria, Ghana, Kenya, Senegal, and even South Africa was the largest recipient of that, the remittance volume. And in 2023, the statistics still reported that about $54 billion was the amount of total volume of remittance being sent into Africa. But the surprising fact today is that, the financial institutions such as the banks independently today haven't figured out, or built the infrastructure for interoperability or seamless remittance infrastructure into Africa. So think about today, there's still a bit of, bottleneck being able to send value from, can you hear me?
Yes, we can.
Yeah, being able to send value from from the US into Nigeria, from Nigeria to Ghana, from South Africa to to Kenya. There's still a bit of bottleneck in terms of like how the financial institutions are able to communicate or interoperate in terms of like settling remittance. And one of the things that we've seen over the last few years is how fintechs have taken responsibility to build infrastructure, invest in the engineering, invest in the liquidity and treasury of being able to settle remittance, across multi-markets, in Africa. And we're beginning to see, uprise, and we're expecting more development to happen, over the next few years. I think that's a little highlight from my end.
Thank you very much. Indeed, the sentiments on the intra-African challenges when it comes to cross-border payments, they ring true, because Nenda, that is our focus in ensuring that that lady in Nairobi or in Mombasa from Kenya can send and receive funds from someone else, or Rakwame from Ghana. So indeed, I hear you, and I'm also eager to see today as part of the conversations, this issue on costs and other challenges around cross-border payments, how we may, how we may tackle this for that impact to be achieved. I'll cross over to you, Paul, to share your opening sentiments on the key developments, and then we can proceed from there. Thank you.
Yeah, thank you very much. I think I need to put things into perspective a little bit. Hong Kong is a city in China. It is a small city, but it is the trade window for whole China overseas international trade. Therefore, we have around $800 billion trade volume last year. And you can see when we talk about cross-border payment, I think it is better to put it into a bigger picture to think about it. Because at the end, cross-border payment is either for two purposes. One is peer-to-peer remittance, consumer basis, and the bigger volume is actually from B2B trade payment. And I look at the number, China and Africa, last year, the trade volume is $290-something billion, which is pretty small in the scale for two area, both have around 1.5 billion people. And 300 billion trade volume is pretty small when we look at the size of these two regions. And one of the key reasons that I experienced personally myself when I was the head of payment in Alibaba, who are helping a lot of exporters or trading company in China to deal with overseas buyer or sellers. So one of the key challenges that we face in trade transaction is that we do not have a secure way to get the payment, or a certain way to get payment, because cost is just one part. Uncertainty is a bigger part. If your trade transaction is profitable, I'm pretty sure it is, otherwise people won't do trading. Trading between China and Africa should be quite profitable. But if the certainty of getting payment is low, then people are pretty hesitate to do the transaction. Not to mention they start to ship the goods. They usually need to get the money before they ship the goods, right? So if they can't securely or comfortably get the money, the transaction cannot happen. So I think there are a big potential in the trade volume between these two regions or this corridor that is untapped. One of the key reasons is because the cross-border payment pain points. Cost is one part, uncertainty is one part. For example, some of the African countries may not have enough US dollar to do cross-border payment. So that's also a burning pain point for trade transactions. And I think fintech is a potential solution to these pain points, especially now we have a lot of new technology, including cryptocurrencies, stablecoin, and also CBDC. And this new technology is actually giving us a new top-down approach that we can redesign this bilateral collaboration or payment cross-border payment systems. Because obviously, the traditional payment system could not solve this problem, at least not in a short time. Traditional payment system, I mean the SWIFT, correspondent banking network. Because in 2020, in a G20 meeting for all the G20 countries, they come together in 2020, they have come up with an agenda about cross-border payment pain points. And one of the there are 5 suggestions to improve that problem, but the first 4 is mainly about adding small change to the existing very clumsy systems. But the 5th one is about only 3 things. One is digital currency, including CBDC and stablecoin. And the second part is bilateral connection between the countries. So I think the 5th angle, the 5th part to improve this situation is a brand new thing. We can start from scratch instead of, okay, we try to fix the old thing, which is usually taking more time and more difficult. So I think we have a big potential, and fintech is one of the key solutions to tap into to capture the new potential. Thank you.
Thank you very much for those, the contributions. And I think you have transitioned very well into the next question, which is still going to be your question. But we just appreciate you talking about the untapped opportunity, especially from a B2B B2B use case perspective, and also the opportunity in boosting trade. I'll continue with you with that because, again, you've already started on it. And the next question from you would be, from your experience within the Fintech Industry Association, tell us a bit about collaboration with fintechs, because you talk about the opportunity to harness or leverage fintech to drive these integrations and the opportunity for B2B, particularly, if I may use that example. Tell us a bit about this collaboration with fintechs. In what ways can banks, non-banks collaborate with fintech entities to enhance cross-border payment systems? And secondly, the importance of interoperability to you between different payment systems, and what steps are necessary to enhance this integration.
Yeah, thank you very much for the question. Because fintech differentiate from the traditional finance, I think they use technology to solve some real life problem. For example, the fintechs in the region, in Hong Kong especially, is trying quite hard to solve the international trade pain points. When we look at the trade flow between China and Africa, it is quite understandable that that's a two-way kind of trade. There are some natural resources, commodity products from Africa that China definitely need. And there are some consumer products, consumer electronics, maybe some telecom equipment that China can produce and needed in Africa. So the trade is quite balanced, quite two ways. But when we come to payment, it seems not that easy. Therefore, some fintech company are trying to follow the trade flow so that they can do some net off in terms of the payment. Because there are some challenge to get US dollar in Africa, some of the Africa countries. But these Africa countries, they have a lot of exports, meaning that they should receive US dollar at the same time when they need to pay some US dollar out. So there are some fintech companies that are trying to bridge this gap using some like matching engine behind, and then work together with the import exporters in the two parts, and then try to solve these pain points. And also, I see stablecoin become increasingly an important international settlement tool when compared to SWIFT. And obviously, that there are some reasons for that. And the efficiency and also the turnaround time, the cost, seems to be much better than the traditional rail. So I think, and also after you have the payment part ready, then we can talk about the trade finance part. Because now the funding cost in China, mainland China, is quite low when compared to the other Western world. The US is increasing, having the peak interest rate right now. So there are quite some arbitrage opportunity that we use the lower funding costs in mainland China to finance a trade transaction between Africa and China, and to help the Africa exporter to get their proceed earlier using the funding rate in China. I think there are quite some cross-border opportunity that is still very small at the moment, but with more interaction between the two regions, including this kind of platform, we can make it much bigger.
Thank you. And I think I'll call in Abiodun at this point because, cheaper cash plays that particular role, and you have been at the forefront of, opening doors from country to country and interconnecting with the partners. Could you chime in terms of the opportunity to leverage fintech for cross-border payments, as well as what you see working in terms of the cross-border interoperability?
Oh, yes. Thank you very much, Jacqueline. One of the things I would like to highlight is that we've seen the rise of fintechs be at the forefront over the last few years, maybe about the last 5 years, at the forefront of powering cross-border payment or trade payments across Africa. And a typical example is a company like Cheaper Cash that allows you to send money across multiple countries. So think about, I want to send money to Kenya for business. I want to send money to my cousin in South Africa. That's just the inter-Africa trade that we're seeing, right? Between different countries or users in Africa or customers in Africa, be it for personal reasons or for business purpose, whatever purpose at which that payment needs to be made. We're beginning to see a huge rise of fintechs play in that space today. And one of the things we're able to also understand is that because of the unique dynamism in terms of settlement processes or infrastructure that are in this country. So think about Kenya today. A lot of transactions in Kenya or payments in Kenya happens over mobile money, which is the biggest player there, like M-Pesa or MTN mobile money, right? And we're seeing the likes of Ghana also adopting mobile money on the rise, which is on the rise in that market. But a country like Nigeria today, we're not so used to mobile money. When you talk about payments in Nigeria, you're talking about banking payments, bank transfers. We're even seeing a drop in how much of card payments are happening, right? And we're beginning to see more of bank transfers, being the mode of transaction, for the day. But on the cross-continental bit of cross-border payments, I will tell you about how big the opportunity is. If you take the statistics we got from the FTZ region, which is the free trade zone region, in this part of the world, talking about the China-Nigeria corridor. It was about, just for 2023 alone, it was almost about $22.6 billion in terms of trade volume that happened between Nigeria and China just last year. Now, look at what's going to happen this year. That's a huge opportunity that a lot of people still have, we can still play in. If you think about, who's the fintech in China or in Hong Kong that we should be talking to? Who's the fintech in Nigeria, like Chipper, or in Africa that we should be talking to? If Nigeria is doing, $22.6 billion, billion in terms of, Nigeria-China trade volume. Look at how much, would come out of Africa as a whole, right? So I feel like there's a lot of opportunity. We just need that synergy and the handshake of, fintechs or financial institutions or, forefront players who are, ready to play in that space. And I feel like, there's limitless opportunity for us. I mean, we know how much of trade happens, even just for small businesses, for them to be able to procure items from China, having to come to Nigeria and, we're seeing that opportunity arise, and obviously we're going to tap into that opportunity for us, as a company today.
Indeed, we'll tap into those conversations in the next theme shortly. Chee, any perspectives from your side?
Happy to talk about fintechs, and I had the privilege to be with one of them, Niam, as I introduced earlier, helping to build the Singapore practice and business from ground up back in 2008 when I joined them. Certainly, I would believe the fintechs are the one who catalyze all this transformation in cross-border payments. Well before Project Nexus, the fintechs are really building their own respective payment mesh, if I may call it, across the whole world. And what I meant by payment mesh is looking beyond just a SWIFT. How do you build your direct correspondent relationships? Take, for example, if I want to send money from Singapore to Hong Kong, the fintech itself would establish a direct partnership with an FI in Hong Kong, which would be integrated through API to the real-time payment system, which in the case of Hong Kong would be FPS. And when a remittance or cross-border payment happens from Singapore to Hong Kong through the API and fully digital, that can happen within seconds and with minimum human intervention. And that translates to also a lot of cost saving, lower costs, and hence much better pricing for the customer, transparency in the FX, and certainty on the amount that the beneficiary will receive. So this same payment mesh, not only can it serve individual customers, it will also equally benefit the SMEs, small medium enterprises or small medium businesses doing B2B. But I caution that if you're talking about really large trade transactions into the millions of dollars, I would say that maybe as it stands is not an area that a fintech could serve well, because the benefit of a lot of fintechs is the ability to leverage on the real-time payment systems. And we all know that there are transactional and daily limits on how much you can transact through instant payment systems. And that would mean that if you're trying to send $1 million transaction through RTP or through IPS, that would not be possible. So the sweet spot, I suppose, for a lot of fintechs would be serving businesses who needs to or individuals who need to send low value but high frequency transfer. And this would really benefit them. And also from the perspective, as I pointed earlier, especially in ASEAN, where the adoption of e-wallets, and I presume likewise in the case of Africa, the adoption rates are high amongst the countries. And typically banks are not good at serving payouts to e-wallets. Although I'm cognizant that many of the banks are exploring partnerships to be able to expand that, but typically their default payouts will be to bank accounts. So if you want the ability to pay out to e-wallets, I think fintechs are in a much better position, and many of them do have direct integration to service payouts to the e-wallets across the world. And apart from e-wallets, the fintechs are also leveraging on the technologies in the areas of compliance, RegTech, on how they can more efficiently handle, rather than having an army of people, a legion of people. I won't sort of necessarily capitalize that of the banks, but usually the fintechs are really very lean. So it's about using technology, RegTech, AI, to still adhere to the stringent requirements, making sure the first principles of combating money laundering and the financing of terrorism. These first principles are addressed, but in a more efficient manner with minimum human intervention. So that's something that will hopefully also speed up your transfer as compared to your layers of correspondent banks and each taking their sweet time to clear those transactions.
Thank you very much in looking at the opportunity for fintech and making payments instant, as well as supporting retail payments, because I think that's where, as you mentioned, that's where we're lagging behind, because the infrastructure and the systems are set as regards wholesale payments, but not yet when it comes to retail payments. I will pick one of your points on the cost as we transition to the next theme, which is cost reduction, and all of you have, in one way or the other, pointed out to this issue. But first of all, maybe to also just look at what some data is saying. The IFC just released a report dubbed Digital Opportunities in African Businesses, with interesting insights. The research highlights that while advances have been made in digitalizing Africa, with mobile payments as a success story, firms still face challenges like higher cost of technology and transactions. Much more could be done to enable and empower them to reap its full potential. This report also mentions that more than 600,000 formally registered firms and 40 million micro businesses, which is about 20% of businesses in Africa, are potentially ready to benefit from digital upgrades and utilization. But high costs and user experience pain points prevail. I think I will start with wanting to hear from Abiodun, with the understanding of the role that cheaper cash plays. From your experience, what approaches could be taken to reduce the cost associated with cross-border transactions, both for service providers and end users? And additionally, what innovations are crucial in improving the customer experience when it comes to cross-border payments and remittances, so that we just drive that digital acceptance? Because you spoke a bit about the challenges with merchant payments, the challenge, I think it was Paul who also mentioned that we still have challenges with B2B transactions. Could you talk about avenues or approaches to reducing costs, as well as innovations around the customer experience?
Thank you very much. So I would say first thing is that cross-border payments, in Africa today or even across the world, for some reason it's still pretty much very expensive. And if you go through the direct, which is the traditional financial institution rails, it's still pretty much very expensive. But over the last few years, we're beginning to see now that a lot of fintechs are coming up with innovative ideas or solutions of creating almost no fee, or I don't want to say free, but remittances at almost no fee, right? Or remittance payments, or cross-border payments at almost no fee. And we've seen these things help grow the ease of transaction or payments across the continent. So think about situations where you're able to send money to maybe Ghana, or you're able to send money to China at almost no fee. And the earlier the better for the traditional financial institutions to begin to think of innovative ways at which they can make remittance or cross-border payments almost at no fee, or less expensive, the better for everybody. So it would also, even if you are able to think about creative ways or innovative ways at which you can reduce the cost for businesses or for individuals who need to make payments, I think it would create better seamless experience for them. So in terms of like time to settle, the cost of that payment, how long will it take for us to send the value across the continent or across the market where the money has to move from, and settle into that market. I feel like over time, the traditional financial institutions will begin to also learn or adapt the models that a lot of fintechs have adopted over the last few years. And I feel like this is like one innovative way at which you can create a better experience for them. Another thing I think about in terms of creating a better experience is how are traditional financial institutions being able to create a less rigid experience in terms of when you have to make a bank transaction or a cross-border payment using a bank today. Do you have to go into the bank, or you have to I mean, go onto their website or download the mobile app for you to do that. I mean, they have to be innovative ways as which you have to, create seamless experience for customers to be able to make cross-border payments. I mean, I feel like, the earlier you begin to adopt these innovative solutions, the better for, for everybody, for the customers, I mean, for the institutions as well. That's pretty much from me.
Thank you very much. Any other perspectives, Chee, Paul, in terms of cost reduction as well as the experience, improving on the experience before we move to the next theme? Yes, Paul, go ahead.
Yeah, I think I'm very eager to talk about the cost saving thing, because it is high expensive because of many different reasons. Part of that is, for example, the banks are earning some easy money. Why would they give up? Some of them because of the friction or the compliance costs. We have experienced something very similar in China before in the past 10 years. At the beginning, all the banks are charging quite high for remittance, even domestically. And so crazy that if I transfer a Hong Kong dollar from HSBC Hong Kong to Standard Chartered Hong Kong, it charged me around $20 US. It's just a domestic payment, a local currency. It doesn't make sense. But the only way to solve that, and we have experienced that, we have done that, is by introduce competition. When you have competition, when they cannot earn the easy money, then they start to think about costs, they start to think about user experience. Otherwise, they will just sit there and continue to earn. And I think one of the opportunity here in Africa is that there are quite some global payment companies in other regions. In Singapore, some headquartered in Singapore, some headquartered in Hong Kong, some headquartered in mainland China. They have built quite a strong global payment network, including Niam that Chee mentioned. And they haven't go into Africa in a big way yet. But once they go into the market, then it means more competition locally. And there are obviously some blocking points right now for these players to go into African market. One reason is African market is quite fragmented. It is quite remote to their headquarters, and there are quite difficult or quite complicated to get a license, because doing payment, you have to get the license. So I think if we can solve this reduce this kind of blocking points so that we can allow international player to go in, and then the traditional banks will follow. It is a much more efficient way than, okay, you go to negotiate with all the local banks, ask the local central bank to give pressure on them. They're at the end just a commercial entity. So commercial is the key driver for cost and user experience. Thank you.
Thanks, Paul. And you raise a very useful point that is usually close to my heart, and this is on the licensing and ensuring that, the fintechs can seamlessly enter different markets and, and also just to boost their passporting rights, and which is also something that we really advocate at Africa Nenda, ensuring that, how can fintechs be given that open and level playing field to participate fully in the cross-border market. And one of the things that you mentioned is in licensing. Chee, do you have any other sentiments as regards the theme on cost reduction as well as improving the user experience?
I fully support Paul in terms of encouraging more competition. It's actually, as fintechs, I think based on my experience, the fintechs are all charging less than sub 1% in terms of the margins when it comes to the pricing for cross-border to most countries. And I think that's really encouraging. I mean, if you look at the World Bank average, hovers somewhere between like 6 to 10%. That's tremendous cost savings, especially from a financial inclusion point of view, helping the blue-collar workers who need to send money back to their home countries, and every cent counts. But I also think that apart from just the contribution of private sector, yes, the public sector, the government should also work together. And on that point, I think the Project Nexus lays the important foundation. because in the past, a lot of this bilateral collaborations, for example, like between PayNow, the IPS in Singapore, and PromptPay, the IPS in Thailand, those were mainly benefiting banks. And banks, yes, their costs would maybe lower, but they aren't exactly passing down the cost savings. So I hope that, and is indeed the case with Project Nexus, this should be available to non-bank financial institutions. Although the condition I read was that as long as those non-bank FIs are able to participate in the IPS of their respective countries in order to leverage on that. So this may be a barrier, but hopefully for those who have and are able to access that, they should benefit from this government collaboration, which I hope will lower the costs for them in terms of processing the payments, and in terms pass down the cost savings to the customers, whether they are individuals or businesses. And the other innovation I want to highlight would be also the area of open banking. I suppose fintechs, unfortunately, given the different legislation, oftentimes they don't have access to bank accounts, neither can customers deposit funds. So it would create a big friction point for a lot of customers in terms of leveraging fintechs to do cross-border payments. Take, for example, after a customer sets up a payment instruction, they would still, at least in my case, when I in Singapore, they would still have to go to their respective banking channels to fund the transaction. And in between, is friction because they have to depart from your fintech user experience, the app or the web, and have to branch out to the bank channels in order to perform the transaction. Hopefully with open banking, that would encourage the better integration so that through direct debit authorization, upon the consent or initial consent of the customer, funds can be drawn directly from the bank account that they designate without that interruption to the user journey. And apart from that, I think open banking will also help a lot from a compliance point of view. Instead of bothering a customer to ask for their bank statements to prove their source of wealth, or asking for certain invoices, if there can be better open banking support to assess looking at your bank transaction history or some other data in order to validate, to ensure these are legit transactions, would also help reduce the friction and improve the customer experience.
Thank you very much for the sentiments on the opportunity for government's involvement, as well as open banking in bringing about competition for purposes of cost reduction. I think we'll swing to the next thematic area, which is touching on technological advancements and security. And I will start with you, Chee, just because you are already talking. And the question is in supporting, I'm sure you agree with me that the leveraging technology and advancements in security and enhancing security are fundamental to building trust in digital payments from a user perspective. From your experience, what are the most promising technological advancements and solutions currently emerging in the cross-border payments space? And also, could you walk us through how, security and fraud prevention is prevailing to your understanding?
I will focus more in terms of addressing fraud, which unfortunately is a global problem. And the fraudsters are also getting smarter. We are using AI, and I'm sure the fraudsters, the perpetrators are also smart enough to leverage on AI to help them. So there's no end to it, but as much as possible, we want to see what are the processes, what are the SOPs that we can put, and innovations that we can put in place. And I also highly believe the government plays an important role in the helping to combat, not just leaving it to the banks or the fintechs to do it alone, because in some ways the government, some government initiatives like that of Singapore, for example, the use of MyInfo, which is a trusted repository of citizen or resident data, which could include your name, your address, your contact details, your employer details, etc. These are trusted source of data that would greatly help in terms of getting information and knowing your customers as part of your KYC or KYB. Know your customer, know your businesses. So through that method and by the customers providing those data through the MyInfo, that provides a level of assurance to make sure that whoever is performing or signing up the service is the person that claims who he or she is. So that in one way is a way to ensure that it's a legit customer. There are also reg tags, as I say, in terms of transactional monitoring, looking at the patterns and just like the perpetrators using AI, we should also leverage on AI to look at the patterns of how customers are sending the money. So if you spot trends like you notice a customer signing up, a brand new customer signing up, and within less than 12 hours, he or she we should send a very high value transaction. So there should be some checks along the way to make sure that these are not people or fraudsters who are trying to leverage on those accounts to do cross-border payments. So there could be some friction point, but these are nonetheless important steps for you to as trigger points for the compliance to ensure that these customers are indeed who they are and sending for the right purpose. And the sharing of information, I think, is something I've been always encouraging, not just amongst the banks, but also hopefully the government can encourage sharing of information, especially all this compliance and fraud information across between the government and the private sectors and across the private sectors, because the fraudster won't just solely use your channel. They will likely tap onto different methods, bank and across different banks, across different fintechs. And if we all work in silo, all our screening information will only contain within ourselves. I don't think that's a very efficient way to combat. Imagine if we are able to information share amongst ourselves, knowing that hey, a similar identity has been trying to use different channels of sending cross-border. That's yet another, I would think, effective way to combat frauds.
Thank you, Abiodun. Any perspectives on combating fraud and leveraging technology to do so, and just enhance security measures?
Oh yes, we've seen technology be the backbone of cross-border payments, starting from Africa to all parts of the world over the last few years. And I mean, in terms of how much of growth we've seen when it comes to cross-border payments, technology has been the backbone, for that. And also, I think I'd like to echo what Chee said, which is more around the fact that when you talk about, security in terms of payments across the world, it's a global problem. If you talk about fraud, in payments, across the world, it's a global problem. It's not just an African thing. It's not an Asian thing. It's not even an American thing, right? It's a global problem. I mean, the amount of things we've seen or experienced in this part of the world is almost the same as what is happening, everywhere. The fraudsters are working sometimes they're working harder than, you as a financial institution, on a day-to-day basis, and they're trying to, see how they can game the system. But I mean, what kind of technologies can we, further enhance or adopt in terms of what we're trying to do? We're trying to see more. We should begin to see more options around multi-factor authentications, two-factor authentications, beyond just the OTP. I mean, at the point of making payments, at the point of carrying out, cross-border payment transactions. But also, I think it's also important to highlight that we're beginning to see the rise of AI being used as the infrastructure to build KYC or KYB in terms of like identity verification or identity checks, for customers who are carrying out this cross-border payment. So on the top of my head, I would say that we're not there yet. I mean, there's still a lot of work that has to be done in terms of security, for cross-border payments or for cross-border remittances, across the world. But I feel like we're hopefully going to see more, technology solutions being built, on a day-to-day basis to combat, how much of fraud occurs. But like I said, at least the existence of multi-factor authentication, being able to use AI to build ID verification systems or infrastructure, will go a long way for us as we combat, fraud in cross-border payments.
Thanks, Abi, for that. Paul, any sentiments before we
Yeah,
take
I totally.
and also pick a couple of questions from the audience? Thank you. Go ahead.
Yeah, thank you. I will keep my part short. I totally agree with the panelists mentioned. Fraud is the key thing to make sure that cross-border payment will work. And there are some challenges I want to raise is about the privacy law in each of the countries. So because at the end, it's an infrastructure that you have all the data in order to do some AI algorithm or the mechanism. And these data are quite difficult to transfer across border. And this has to get some government level, public sector level collaboration because the fraudsters are getting really global now. So they can be working on any countries and the case will happen in other countries. So global collaboration will be extremely important in this environment. And there are some technology like zero knowledge proof that could mitigate a bit on the cross-border data transfer challenges that we are seeing. So I think technology can definitely solve this problem. But at the same time, like Chee mentioned quite a bit of time, the private sector and the public sector, the government, will have to do quite a lot of things in collaboration across the board. And then we can find some solution. And we are not saying that we can kill all the, stop all the fraud cases. But if we can identify the fraud cases in a very fast manner, meaning that, okay, it happened once, we label that bank account or that person, that address as a suspicious account, and then we share this data among the potential partners. And we prevent the second and third cases committed by the same person. So I think that may be an easier goal to achieve. Thank you.
Thank you very much. I think we will take a pause in terms of the ongoing insightful conversations to also look at what the audience is saying in terms of questions, comments. Please allow me to pick questions to our panelists at this point. I can see Gift Akao Gore has many questions. Gift, I'll allow you to only ask a few. I can see you put 7 questions. So the first question is from Gift, and he asks, what strategic partnerships are essential for financial institutions to thrive in the African cross-border payments market? Anyone chime in?
Yes, I will talk about, for me, the first thing I would really advise on is footprint partnership. So for instance, I mean, there are a lot of, fintechs today who have limited, footprints in other markets, right? I mean, when you think about global expansion or regional expansion or continental expansion, one of the things you have to think about is it will take a bit of time for you to most likely go through the process of setting up another entity or another business, in a new market. Why not look out for partnerships with someone who has footprints in those markets? So for instance, I mean, you are in maybe Malawi and you need to expand to Nigeria. It might take a bit of time, going through the whole licensing process. Why not just look for a handshake of an existing player in that market you know, and you guys come together for a synergy or some sort of like partnership, you know, to be able to, you know, make things happen. And, you know, we've seen how, you know, the likes of, you know, a few market corridors are beginning to, you know, skyrocket. So think about how much of trade is happening today between, you know, between Nigeria and Ghana, between Kenya and Uganda. I mean, it comes with a lot of synergy and partnerships for you to be able to, you know, expand across those markets when you know that, you know, there's trade and commerce happening, you know, there's trade volume happening there, there's a market opportunity there. I mean, I feel like the best thing you can do at that point in time is some sort of like synergy whereby there's a handshake between, you know, two entities that have, you know, footprints in this market and are looking out to, you know, capture that, you know, market opportunity. That's pretty much the idea for me.
Thank you. Any other perspectives from the speakers?
Yep.
Yeah, go ahead.
So I think you can analyze both ways, inward and outward cross-border. For paying out with to Africa, I think it's essentially how the fintech partners who wants to support payouts to Africa can better navigate within the African continent, because with the 54 countries in there, we will want to see as a fintech how we and who we can collaborate with through that single one or two partners be able to service the entire Africa rather than having to deal individually with the different countries in Africa. And I noted that you have your Pan-Africa African payment and settlement systems, which I guess would be good for the real-time payments across the different countries within Africa. But essentially, whoever that wants to service payouts to Africa would be having a better time if there are easier way for them to know who they can partner with to gain access to that in the API so that they can service payouts to all African countries. That's number one. And number two, in terms of the outward sending money out of Africa, which I think is all about how also by leveraging on fintechs, because many of these fintechs, just like Niam that I mentioned before, do support enterprise with a B2B play. So helping banks or helping large corporates to see how they can leverage on the fintechs and the payment mesh to also support outward payments from Africa to the rest of the world.
Thank you very much. I think the second question would be, how is the lack of a unified digital identity system across African countries affect cross-border payments, and what solutions are being proposed and the way forward? It's a question from, still from Gift.
Yeah, I think this is a very important question. There are many unbanked population, similar to what happened in China before. I think there are some new opportunity technology that we can solve it in a easier way. For example, when we talk about blockchain, we also talk about distributed ID. Instead of an ID card, it may take quite some time to distribute to all the population. But I suppose many of them should have a mobile phone. And mobile phone, you can use also biometric information and to generate this ID token on the blockchain. And then it will act as like an ID card or a KYC source of KYC information. I think that will help a lot. Instead of, okay, you use the traditional way and ask all the bank to open more branch in all the region, it will just take ages. I think we can find something better to solve the KYC ID problem.
Thank you for that. Are there any other perspectives from our speakers? Or okay, I'll move to the next question. How best can we harmonize the very bright prospects of PAPS with a very ambitious outlook for the AFCFTA?
So I think this is a fantastic question, and for me, one of the things I say is that PAPS is a project that every one of us has to come together to work on, right? I mean, the more we keep leaving it for, the organization to build the infrastructure, for PAPS, the longer it's going to take for it to come alive. But one of the things I say is it takes everybody, coming to participate in that project to make it come alive. So think about the government, the central banks, the OFIs, the fintechs, even the banks themselves. We all have to come together as as a single unit, and we have to participate in that project for it to come alive, right? And if we are hoping to see what the AFCTA would grow to become in terms of cross-border trade across Africa, I mean, you obviously need to understand that PAPS has a big role to play in that game, and I feel like it will take a lot of us coming together. And if you think about it from an African perspective, there's this African proverb that says that it takes a village to raise a child, right? The child here is PAPS, right? And what's the village? It takes the government, the banks, the central banks themselves, the fintechs, and even we as fintechs to come together and build PAPS. And I feel like hands are on deck. It's going to come alive, but we just don't know when. But a lot of hands are on deck for it to see it come alive. And I'm very optimistic about the opportunity that PAPS would basically bring to us as Africans today.
Thank you very much. Another question from an anonymous attendee on why not fix SWIFT and allow fintech to plug in? Interesting question. I see that Dr. Patrick, you've requested to answer this question. Do you want to chime in?
Yeah, I wanted to answer it, but then why not fix SWIFT? If I was going to respond to say, SWIFT have been a legacy system. It remains the dominant, especially for wholesale, business to business, banks to banks. But I think what Africa has witnessed in the last decade is challenges with corresponding banking, most financial institutions in Africa. Even in recent times, I think a major bank here in the US actually closed accounts of several banks in Kenya and most of East Africa. And the issue about the dominant US dollar when it comes to settlement via SWIFT, is it in the best interest of Africa if a business in Kenya wants to trade with one in Egypt? It's Naira against Egyptian pounds, but then the settlement is in a third currency, US dollar. Is that in the best interest of Africa, intra-Africa trade? So for me, it's for us to look at how, as a continent, has SWIFT served the best interest of inter-Africa trade? Probably no. Probably no. So maybe it's time, like PAPS, if it works, I think should serve the best interest of Africa. I mean, I'm speaking here from my personal opinion, not on behalf of AFN. I think PAPS come with the issue of currency volatility in Africa. It comes with the fact that it's within the context of central banks of Africa. It recognizes the limitations when it comes to cross-border trade and cross-border remittances. But PAPS has faced its own challenges. I don't speak on behalf of PAPS. I don't know why it has not scaled. Is it a matter of approach, more driven to the central banks, more driven to the public sector than the private sector? It's up to PAPS to respond to that. But back to the question whether SWIFT should be fixed and then fintechs plug in. Personally, I think no. I think it's high time Africa, for intra-Africa trade purposes, looks at something that is context specifics and speaks to the diversity and fragmentation of Africa. 54 countries, 54 different problems, 54 different currencies. I don't think SWIFT has been able to fix that. So it's time for the fintechs like Flutterwave, the big unicorns, to come together. I mean, Flutterwave has done a good job in the space in terms of the rails for payments for intra-Africa purposes. Can that be scaled to ensure all of Africans, fintechs, institutions can plug into it? Yes, no. Again, what's PAPS doing? I think Abiodun is better placed being in the payment space to really speak to this. But personally, I don't think fixing SWIFT is the solution to inter-African trade. I don't think so.
Thank you very much, Dr. Patrick, for that answer. In the interest of time, I'll take one more question from William Kome. And then I'll hand over to, I think it's Sean, for the next session as we wind down. The question is, considering there's so many cases of fraud and threats affecting the fintech companies, how can fintech leverage insurance to protect its customers? Happy to have any one of our speakers contribute or, respond to that question. Okay. Shall we?
I can address a little bit. In insurance, it relies on a stable statistic to underwrite the risk. I think there are not enough infrastructure or not enough base data for insurance company to underwrite it in a reasonable price, especially in terms of the fraud cases. It is a global issue. Maybe it is a bigger issue in Africa, but China, it is a very serious problem as well. I would say it is quite difficult for insurance to come in with a reasonable price at this moment, because all the anti-fraud infrastructure are not that ready. The fintech company is a pioneer in implementing all the anti-fraud measures, technologies. I think fintech company will have higher chance to negotiate with insurance company to cover their fraudulent cases risk. But it will be a case-by-case situation. You cannot imagine an insurance company will undertake a generic risk for all the fintech company in terms of the fraud cases. Similar, especially in payment area, you have the fraud cases, you have chargeback on credit card. There are quite limited insurance company are able to take this risk. And of course, if you are willing to pay the very high price, there must be, but that would not be make commercial sense.
To my knowledge, I frankly haven't heard of any like payment service provider that can assure or insure customers that your transactions are fraud-free. Not to my knowledge. Although to what I know, there are insurance companies providing cybersecurity insurance, mainly to the businesses and I think maybe to the individuals as well, but certainly not fraud.
Thank you. I think from Bettina has a suggestion here. She says that for the question on cyber fraud and insurance, check out Wimika, wimika.ng. Maybe a use case is right there so we can all learn from. Thank you, Benita, sorry, for that comment. We have come, unfortunately, we're not able to go through all the questions. We are super grateful that you have kept them coming. We've come to the end of our discussion today. Thank you all, for your contributions, both the panelists as well as the audience. To everyone who joined today, thank you for being part of this important conversation. We encourage you to continue this dialogue through the webinar organizers and explore how you can contribute to shaping the future of digital finance. Thank you once again, and over to you, Shane, for the next segment.
Okay, thank you, Jacqueline. I'd like to say a big thank you to Jacqueline, all the panelists, Ho, Paul, and Abiodun for the insightful comments and perspectives to the issue of cross-border payments. It's a major issue for us in Africa, and I think I see this discussion going on for the next 2 years or more, and how we're going to resolve this. So thank you very much. I believe that we've all learned a lot from this session. From Fintech Association of Nigeria, we say a big thank you to our partners, African Fintech Network, for organizing this with us. So what's next? We're going to be having our social meet in September, so get ready to wine and dine and to boogie. We're also going to be having other webinars. We'll be having one with IDEA also, which is Asian Indo-Asia Society on cross-border payments again. I mean, to look at what they're doing there and how we can learn from Africa. That should be sometime in September. And then there's the Nigerian Fintech Week coming up in October 8 to 10. So make sure you're there. If you have not registered, please register. And it's going to be, there's a whole session. As a matter of fact, FCDU wants to have a whole session on this issue of blockchain technology, cross-border solving payments. And so it's going to be an interesting time at the Nigerian Fintech Week. So plan to be there. We look forward to seeing you. And if you have not joined the association, please join. There's a lot to benefit from it. So thank you very much. We wish you, and I hope you'll enjoy the rest of the day, whatever is left of the day. For our friends in Asia, the day is gone. So thank you very much. We appreciate all of you, and have a nice evening. Bye.
Bye.
Thank you.
Thank you.
Bye.
Thank you.